Let's go. Thanks everyone for joining. So today we'll talk about the tax reliefs for UK startups. When I say startup, first of all, what is a startup? Many businesses today call themselves startups. There are many definitions. Not that I will give you the right one. I don't think there is like a right one. But a startup, any business that recently launched and have got very ambitious plans and going to expand very quickly, maybe like 10 times, 20 times revenue-wise next year. And so I would say lots of rules, like majority of the rules, majority of the compliance, they're all relevant for any businesses in UK. And there are a few specifics, and we'll cover some of them. R&D tax credit, SCIS, EIS, they are more relevant for the startups only. But we'll also touch on the other topics that will be relevant, not just for the startups, but for all UK companies. Plan for today, let's put it there. We'll cover employment allowance very briefly, then we'll go for VAT. Oh, what happened with that? So yeah, we'll go for the SCIS, EIS. That's my personal favorite topic, and I think favorite one for some of you. Then we'll go for the R&D tax credit. That's something that people get more and more familiar, fortunately, and then we'll cover the VAT, and last section will be Q&A. So let's jump on the first one. The generous tax man. Many people say that HMRC, they take lots of taxes from us, but the truth is there are lots of incentives and lots of reliefs that are available. So the problem, I would say, HMRC may not be the best organization to promote and to advertise them, and I'll try to cover that gap today. And let's go. The first one, employment allowance. That's the simplest one from the tax reliefs, and it's probably, if you run the business, probably you are already claiming that, and maybe you are not aware. So what is the employment allowance? If you employ someone, as you know, you have to pay employers' national insurance, which is 13.8% above the threshold being around 8.5 thousand per year. So if you let's say employ someone and pay them even like minimum wage, if employee gets, I don't know, 12K per annum, then you're going to pay some employer's national insurance contribution. And if you have an accountant, the probability, like probably they claim for this employment allowance. Sometimes these get missed, so double check that you are getting that. It's pretty much one tick. What is this? It's first £2,000 of employer's national insurance contribution. HMRC says, guys, we are, if you're eligible, just tick the box and we'll grant it for you. So you get this £2,000 free. So you simply pay whatever above £2,000. So who are eligible? Pretty much all the businesses. The exception, I would say, if you run the business and if you are the only employee yourself, you're director, you pay yourself, I don't know, 20K or something. And if all employment national insurance, employer's national insurance is about you employing yourself, then you will not be eligible. But yeah, pretty much the rest of the cases, you'll be fine. And that's £2,000 per annum. So, and as you know, the tax year starts on the 6th of April. So you can get the tax relief for the current tax year. And from next month, it renews and you get 2,000 again. And as long as the rules don't change. In the past, it used to be actually it is 3,000 now, what I'm talking about. It used to be 2,000 and they've increased it, so you get 3,000. So it may change from year to year. So watch out in terms of amounts. Next one will be R&D tax credit. R&D tax credit is, imagine if you've got a startup, and again, it doesn't necessarily have to be startup, can be in traditional business as well. If you have a project where you are thinking of something, if you're innovating something, can be a product that doesn't exist yet, but you want to try. And you want to try, you get the developer builds the platform, builds the website, builds the application. These are the classic cases. And it doesn't have to be successful at all. And there are many projects that fail eventually, and that's okay. Even if that fails, whatever amount that you spent, you can get, roughly speaking, it depends on many factors, but roughly speaking, let's say you've got a startup, you've got an app, you paid 50K for development. If you can get, if you employ that person, let's say you have a developer, it's employed in your company, the total cost is 50K, you get, roughly speaking, around 10K back from the government, which is not bad at all. If it's a subcontractor, if it's not employed by yourself, then the cost, then it will be around, it will be 65% from that 10K. So you're getting less. So there is incentive to hire that person. But if you have a subcontractor somewhere else, not employed by your company, that's absolutely fine as well, but it will be slightly less. So again, it doesn't have to be the application. It can be any, let's say, if you want to start building the process in the company and you're not sure, there is a certain uncertainty, that's one of the eligibility factors. You're not sure whether it will be successful or not. You know, sometimes you do something, you know, like, oh, if I implement that, it will be profitable, no brainer. Unfortunately, that is a tricky one. You will not be eligible. But if there's uncertainty, if you're starting something, you're not sure whether it will be successful or not, then that is a very valid point to claim R&D tax credit. There is no penalty for trying to claim it and not getting it back. I mean, the worst case scenario, you're making the application, you're putting your case, and HMRC will say, guys, sorry, no, that's not eligible. Usually how it works in the industry, the accountants, including us, we don't charge the fixed fee for that, is no win, no fee the case. So there will be percentage. The percentage starts, you will find, from 10% from success rate. I've seen the big four firms getting 25% from that. So let's go to the next one, will be SEIS, EIS. So SEIS stands for Seed Enterprise Investment Scheme, and its brother or sister in EIS will be Enterprise Investment Scheme. So what is this? If you've got a startup, probably you will not have enough funds to run it. I mean, if you've got it, good for you. If you don't, you want to approach investors and ask for some money. So imagine you've got a great idea. You go to someone, your friend, say, guys, I've got this brilliant idea. I want to start doing this and I need 100K. And why don't you invest in my startup? I know you, I trust you. Yeah, that sounds good. Idea is good. What else? What else is there for me? If you say them, what if you say, if you invest £1,000 to me in my project, and you will get £500 back in taxes from HMRC, tax back, you will get a check, or you will get it in your bank account within 2-3 months time. That's a big incentive for me, right? I know you're starting out, I know you're a great guy, but there is always uncertainty, and let's face it, the startups are always risky. But if you've got this incentive, that will make me more willing to invest. So that's what HMRC has done with the Seed Enterprise Investment Scheme. For first £150,000 your company raises, every investor, as long as they pay enough taxes in UK, they get 50% back from their investment amount. And that's not it. There are more benefits. For example, if when the investors sell their shares, when there's an exit, if I sell my shares, usually I have to pay capital gains tax. Not with this scheme. It's capital gains tax free. So again, another benefit. Last one, if the startup fails, which does happen from time to time, as you know, I also get the tax relief for my failed investment. So the worst case scenario with SEIS, I can lose 29% from my investment. So that is a big case in any investment pitch you're making to the investors. Make sure you have and if you've got an SEIS, EIS, make sure you have a section for that. So which companies are eligible? I would say the majority of the startups will be eligible. If you have an accounting firm, that will not be eligible. Lawyers, legal firms will be outside of that. If you've got a property, if you want to build something, again, that's an easy no. But if you've got any startup like restaurant, any business, normal trading business, it should be eligible. So what is the difference between SEIS and EIS? So as I said, for the first 150,000 you're raising, you're getting 50%, investors getting 50% back, 50% back. And what if you want to raise more? What if you want to raise 200,000? Then for remaining 50K, that's when the scheme switches from SEIS to EIS. So, and that's where the eligibility will be, will go from, the tax relief will go down from 50% to 30%. I mean, still great incentive. Why you have this? If you SEIS will be pretty much the first stage, first pre-seed or seed level will be around 150K. So these companies are more riskier. Therefore, it is fair to give more incentive for investors to invest in the company. And one thing, a couple of points. First of all, it has to be within 2 years of starting the business. And it's not like you incorporate the business today and you have 2 years to get SEIS. It is whenever you issue the first invoice, whenever you started trading, and from that point you have 2 years to claim SEIS. If you didn't manage to do that, then we're talking about EIS. EIS, you don't have this limit. You can do it in 3 years, 4 years, 5 years time. So what else? The very important one, 3 years. You have to keep the money. Investor has to keep the investment within the company for 3 years. If you don't, then you have to. I know the case. One of the clients invested in a startup and had an opportunity to exit the startup, and he left someone bought his shares in 2 years' time after he was eligible for SEIS. So he made a good gain, but he had to pay capital gains tax because it was within the 2 years' time. And also he had to pay all the income tax benefits that he got, like this 50% tax relief. They had to pay that back to HMRC. So watch out. The relief is good, but you're kind of tied in the company for 3 years. So I got a few questions. Let me just quickly go for it. Someone asked, what is the percentage you get back on R&D? Again, so it's not like there's not easy answer. Is it like 20%, 30%? Roughly speaking, you're talking about 20% from the expenses, but it depends. It depends on manufacturers, and there's a big amount of calculation behind. But roughly speaking, if you have 20%, that should guide you. 20% from amount of expenses that you have. And another question I had, what about international investors? If they are from another country, can we still use SEIS? Yes and no. If these international investors have got any UK tax, any UK income, and if they pay UK taxes, then yes, why not? If they don't pay any taxes in UK, there is no tax back. I mean, that's a main one. HMRC says, look, as long as you pay taxes in UK, we are returning your tax back. And even if it's a UK taxpayer, have a look. You know, some people don't really pay that much tax in UK, so you have to make sure this is someone who is not earning enough and paying enough tax in UK, so they have this threshold to pay back. And also you have, with the SIS and EIS, you can claim it back for whatever tax you paid this current tax year and also last tax year. I had a few examples of the international investors. They had property in UK, and if you've got a property in UK and that you rent out, you pay taxes in UK. So if that's the case, for example, they're based somewhere else, and if they pay tax on the property income, they can invest in the SIS and EIS eligible companies. And we do, what we do, we help to get the assurance, SIS and EIS assurance. What it is a piece of paper that from the HMRC that tells that, yes, we've done an assessment, this company is eligible for SIS. And you can just show that paper to the investors as a guarantee that, look, if you invest in the company, this company is SIS or EIS eligible. And then we obviously help with all the paperwork for the investors to get their money back. We send the certificates and they can use the certificates. There is a second page on the certificate. They can just fill it out and we can help filling that out and send it to HMRC to get the tax back. It's relatively straightforward. So in order to get the tax back, they can do this postal form, or they can always put this information as part of their tax return. Moving on, the next one is what we have. VAT. Many people wouldn't call this tax relief. Why it is important and why it is important for the startups. The startups usually don't earn any money at the beginning. They just expense and expense and expense. So although many people think when you have to, first of all, when your business has to register for VAT, you have to register if you exceed £85,000 turnover threshold. If you're doing well and if the business is hitting 85K sales per annum, so you don't have a choice, you have to register for VAT. However, it doesn't mean that you can't register before that. So if you don't have even any revenue, as long as you intend to have a revenue in the future, if you already have a trading activity, and if you're working on something, you can register for VAT. Why would you do that? Because if you haven't got sales invoices, so you don't have to add 20% VAT on your invoices, but you can claim the VAT back from your expenses. So let's say I have an idea. Again, I started my startup project and I hired developers. I have to pay accountant. I have to pay for subscriptions. I have to pay for rent. Not all of them. Some of them will definitely have a VAT in the bill. Again, our fees will have a VAT. Legal guys will have a VAT on their bills. The rent will probably have a VAT on them. And by registering for VAT, you can simply get this VAT back from HMRC. And there is no limit. I mean, if you've spent like $1 million and there is I don't know, 150,000 VAT on that, you can claim that. HMRC can always check, do the investigation, but as long as you've got all the paperwork right, there is no limit. You can just keep claiming the VAT back, like one quarter, the second quarter, third quarter, etc. So that's a VAT, and we are moving on to the next one. Before that, if also the next one I would say that I would like to touch is business expenses. Again, there are many expenses the company incur, and it's not really tax relief, but you have to pay corporation tax at the end of the year. So watch out for business expenses that you can claim: the salary, the pension, the training. Many people miss the training that reduces your income. On that, I recorded, I had another webinar. If anyone is interested, I can send the link so you can watch where I cover the business expenses there. So about us, we are the firm of accountants and tax advisors. We're covering the UK clients only, and we have some international clients with UK interest. So we're happy to serve them as well. So we're based in London, and we have an office in Sheffield as well. So that's our lovely London office and the Sheffield one. So how we work, usually I mean, if you're a client, you know, we offer all-inclusive packages where we take care of everything. We do the bookkeeping, we do VAT return, payroll, annual accounts, tax return, basically anything that startup or any small to medium business needs. And okay, we assess your situation and we say, okay, like this is the monthly fee that you will get, and that's it. So every month you pay the fixed fee and all the services included. Not like at the end of the year, we'll do the annual accounts and we'll send you the massive bill. You know that everything is included within this fee and there will not be any surprises. We use Xero as accounting software, the best one in the UK, at least for time being. They're great. We can automate lots of stuff, and therefore the bookkeeping fees are relatively low. The same thing, we use Receipt Bank. It's you as a client will just have to capture the receipt in your app. If it's a hard copy of the receipt, and you don't do anything else. You simply tap the photo, the submit for processing, and we take care of the rest. Okay, I think that's fine. Not going to torture you anymore, and we'll do more of these webinars. And if you've got any topics that you think we can cover, again, very welcome to let us know what you would like to see. You're welcome. And yeah, so thanks for joining, and I will see you next time. Bye.